Hello, and welcome back to my channel. Today's video is about the basics of M's and W's, the patterns that they make, and how you would be able to trade them as a strategy. So a lot of you guys do struggle with this concept, I'm finding. I assume that most of you know these very basic concepts when you start trading more intermediate style strategies that I provide. But I'm finding that a lot of you actually don't. I guess you skipped that Forex class. I don't know. But before I even get into this, I want to first and foremost tell you guys to please go look at babypips.com. It is free. They have tons and tons of free content on there that is really good for newer traders. Even if you feel like you kind of understand trading, but you're still struggling with some basics, I still highly recommend that you go onto their website and look at all of their stuff that they have. They have a really terrific beginner section that you can go through and you can like graduate from it. They make it all kinds of like fun, I guess, in that way. You know, and it might be boring in comparison to watching like a YouTuber flip, you know, I'm doing air quotes like you guys can see me. Anyway, when a YouTuber says that they're flipping, you know, $100 account and made $5,000 that day or whatever, I get it. That's flashy and it's entertaining to watch. And you're like, whoa, if I could only do that. And, you know, if only a lot of us could do that with $100 or whatever ridiculous low amount that they say they're using and way over leveraging. Nonetheless, moving on from that topic, babypips.com has a ton of realistic, very good content for you guys to use, and I highly suggest that you go look at them and check them out. It's all free. It's all free. It literally will just take you and your time committed to learning it. And all of those concepts that they're teaching are really needed before you can ever jump into any strategy and be successful. You have to understand the basics. But because a lot of you guys have skipped those courses and you are where you are now, I want to quickly run through this M's and W's pattern. Basically, what I'm going to try and do is show you guys a video that's not mine. I have no idea if I'm allowed to do this on YouTube or not, but we're going to give it a go. And we're going to call it a reaction video. If anyone asks, wink, wink, a reaction video. For real, I want you guys to watch this video. It's about 6 minutes, and I think that it's extremely helpful for you guys to understand what he's saying. And I thought about like just redoing it, but truthfully, they do such a good job at it, and they do it in 6 minutes that it was just better for you guys to watch it. So I'm going to show that video. Hopefully YouTube lets me keep this up. I don't know if they will. I might get a copyright slam or something on me, but we'll see what happens. But let's pay attention to it. And then I will, at the end, run through this little example here on like how I would enter and exit. So here is the video. This is the channel if you guys are interested in more of their content. It is the diary of a day trader. It is good. I like what they do as far as their content. It's not the fanciest stuff. It's not like the most entertaining, but you know, you're here watching my channel, so clearly you're okay with not being entertained, but it is educational. So yeah, if you guys are interested in them, that's who they are, and they have a ton of stuff on here. FYI, but they like put this 90% win rate in here. They have no backtesting data to back that up, nor do I. I am not claiming this is 90%. I'm pretty sure that's like a clickbaity type of thing, but who knows? Maybe somewhere in their stuff they have proof of that. I highly doubt that, but it is a good strategy, and it's definitely a good thing to know as far as like adding it in as a confluence and remembering it when you're putting in other strategies or you're using technical analysis. Fancy. I like the bull and the bear.
In this video, I'll take a look at how to trade double tops. Now, double tops are one of my favorite patterns because they're so easily identifiable, and that's good because that means the rest of the world sees it too. So at this point, we should define it. It's exactly what you think it is. It is the top of the market being tested twice. Sometimes you'll hear it referred to as an M pattern. So a double top is just simply a price that the market just, for whatever reason, can't seem to break above. The resistance has held. Now, there are a multitude of ways to trade double tops. Some people go ahead and jump at them early, But the most orthodox and basic way to trade them is to simply sell once they break down below the 3 lines here. Price goes up, it pulls back, it finds support. It goes up, it pulls back. You expect to find support. If it gives way, this means that everybody who is long of a currency pair, or any market for that matter, is now in deep trouble, and they have to sell their position to get out of it, to get rid of the losses, and that accelerates the movement to the downside. So here's a couple of examples I'll run through. This is what a double top looks like. It's not to the pip. I see that the first top is a few pips higher than the other one, but you can see that the basic range held a few pips off. One would say that the 113.50 level held as resistance, and there is the bottom of that M pattern, and once that breaks down, it goes lower. Now, what's particularly interesting about these double top patterns is they have a built-in measuring stick. So this one is basically 50 pips, give or take a few pips. So at this point, you would be aiming for a move down to about 112.40 or so. And you can see that happened rather quickly on the 4-hour chart. Let's take a look at another one. And I find this interesting because of a whole host of reasons, not the least of which that this double top formed right at a previous support level, which should now be resistance. So the pattern starts at this candlestick, and you can see we had that, and eyeballing it quickly, it's another, say, 50 pip pattern or so, and you can see that is basically the same distance. Within a few pips, it actually overshot just a bit. Where do you put your stop losses? Well, stop losses can be done in a multitude of ways. The most obvious place is behind them, but I prefer to do them in the middle of that last down leg because you want a built-in risk to reward ratio in your favor. If you put it up here and you're measuring for just a move to match it, then it's a 50-50 shot. It's a pretty reliable signal, don't get me wrong. But your risk to reward might be 1-to-1, and that's not ideal. So that's why a lot of times people will put their stop in the middle. And quite frankly, if it goes to the middle here, then you've got sloppy trading. You're probably going to run into some trouble. You can see here on the weekly British pound chart just how powerful a double top can be. We would draw this out like this. And sometimes they're easier to see on line charts if you choose to use those, at least to identify the patterns. You can see that the bottom here is about 137.50. Remember, this is a weekly chart, so. And the top is about 144.50 or so. So 137.50 to 144.50 will give us a potential 700-point move. So at this point, you'd be looking for, basically 130 and a half or so. And that's exactly what happened. So you can see it works on multiple time frames. You can even make a case for a very busy double top here. The main premise here is you're just looking for places where resistance is held more than once. And there are triple tops and quadruple tops and everything else. It's just that the double top tends to be more common and more often seen. Double tops are a great way to play a market. They don't necessarily have to be a reversal of a trend. And really, when you see this double top here, it really isn't. It is a continuation of this longer term trend. And when I get rid of this and I put a fib from all the way up here, there's a really good chance that it hits a fib. Yeah, it's right there at the 50. So that's kind of confluence there. So double tops are a great way to trade. A word on them, though, the higher the time frame, the more reliable they're going to be. A double top on a 5-minute chart can and will work quite often. But let's be honest, what happens on a 5-minute chart is more than likely going to be noise as opposed to a weekly chart. And if you think about it, it makes perfect sense because It takes quite a bit more in the way of order flow to make out a pattern on the weekly chart.
I'll get into this, but just quickly, you see on, just try to follow my cursor here. I don't know who uses white screens, white backgrounds, but obviously this guy does. It's fine, whatever. But it's hard to see my cursor now. Anyhow, when you're watching my cursor come down, you can see what you have here. You have the first leg of what would look like a W. You have a retracement up here. What would now be a second bottom to form support along here. What I would be looking for here, and if I was trading this, you're waiting, you're not going to take any entries yet, would be for this second leg of the W to start forming. When and if the market were to come back up to test this area and you got a breakout from it, then you would be looking to buy, and you could potentially be looking at going even higher first leg of the W, because when it comes to M's and W's, the second leg of them is usually the one that is the best to trade. And that is when you would know that you're actually making an M or a W. But that second leg, meaning this part that hasn't formed yet, but if it forms, that would be the massive long runner that you would really want to get in on. Hopefully that was educational for you guys, and hopefully I don't get banned from YouTube for that. So I'm going to run you guys through a example of a W now that we saw an M example in that video. So you can see here clearly this is a W. I've already drawn it out to save time and to make it easy for your eyes to focus in on C. But you can see what we've had happened here. Vice versa of what he talked about in the video where you have a double top for the M's, you have a double bottom form down here, which creates that W effect. And it's sitting at a support level. So that creates your support now. So you're not trading this first leg, you're not trading in the middle, you're not trading the second leg of the middle, you're waiting for this leg to form. Ideally, what you will have happen is you'll just wait. You will mark up your area, so your middle area that we have marked there, and you're just going to wait until the market truly shows you that it's actually making a W and not just sitting and consolidating back and forth. The clue here is when you pass that middle area of your W or your M, when you have the breakout from it. Like he said, where you're hitting either a support or resistance and you're breaking out of it, you're looking for that to happen. So essentially, this is a breakout strategy. What you're going to look for is a breakout from that middle area that happens here on this candle. And I don't mean like a wick, guys, like these little wicks that kind of like poke up and stuff. You don't care about those. Those are just prices tested it, but a wick is just telling you price has been rejected at that price and it's pushed down. You care about the candles. So you want like a nice, good, clean candle. Like this is a very strong, good candle showing you that the price is trying to push up and it has pushed out of that area of resistance. So now you are looking to form that second leg of the W. That is where you would look to enter into your buy, and I will show you guys what that looks like. Okay, so marking up for our buy, you would enter at close of candle. Even though this is on a higher time frame, like a 1 hour or 4 hour that you should be looking at these, you're still waiting for close of candle, guys, because those candles can end up just like wicks, and that wouldn't be good for you. You'd be stuck in a trade that you didn't mean to really take. Okay, so as far as marking up goes, so we're entering in at close of candle. And then as far as our stop loss goes, we want to be somewhere kind of like in the middle of the W. I strongly suggest you do not go all the way down here. These are high time frames and those are huge stop losses. The idea here is that you are breaking out, meaning that momentum, volume, all of that is pushing in your direction. The market makers, they want it to go that way now. They're saying, okay, time to go that way. So it's either you got it right or you got it wrong and got faked out. And that's okay. If you lose, you lost. Accept the loss, move on. If you got it right, though, the market's going to go in your direction. So keeping your stop loss at a safe area but not insane is the smartest thing to do here. Because you don't want to go insane, because if you're wrong, you're going to really take some hard losses there. But if you're in the middle and you have to take a loss, it's not that big of a deal. You want to keep your stop losses good, but you don't want to go too crazy. Don't be hugging the line that it just broke out from, because if it comes and retest, you may get wicked out. But, you know, kind of go a little bit in the middle area of where usually you'll find a zone where prices like, and you can see what I'm talking about, like all in here. There's lots of candles opening and closing, opening, closing, opening, closing. So this is a nice area here too. So this is a nice area. So we can put our stop loss right in around in that area. And then as far as your take profit goes, this is going to be up to you guys and will depend on your level of comfort here. I personally like to look to the left and use previous levels. So this is something I'm more accustomed to, is picking out levels as you go along. So something like this, you know, and I like to pick the levels here and then here. That is my preference. Some of you like to trade zone to zone like that. Others don't. You like to just set a certain risk to reward. If you are trading zone to zone, this is pretty easy and clear cut for you. Obviously, you pick the next area that you would want it to go to. And in that case, that's here. So you would be looking at a 1% risk of your account and a 2.16% reward for your take profit 1. And then if you held beyond that, you could be looking at, you could be looking at 3.98 and so forth. You guys, that's how you would do zone to zone when it comes to doing that. And you would be trailing one zone behind each time. So you might be up here. Once the market gets up here, you would just be moving to trail behind by one zone. That's up to you guys to do. If that confuses you, I have tons of videos showing how to trade zone to zone. Go watch those. The only thing I do want to stress about doing a zone to zone type of situation is that you guys need to make sure that you're getting at least a 1-to-1 risk to reward. So if your next zone is like, say we entered where we did here and we went to only this area. Because I know somebody's going to be like, but the next zone was there. Why didn't you take that? Because it's only a 0.74 reward. And although it's not a bad reward, it doesn't necessarily make this trade that amazing or make me want to take this trade. So I wouldn't want to risk 1% if it loses to only gain 0.74. That's not good risk management. That means this isn't a good trade to take, and you would just skip the trade if that was your only option. In this case, though, there's another good zone that is up here, and that one does give me the more realistic type of reward that I would be looking for. Gives me a nice 1-to-2. That I would be willing to take this trade, hold it, and see how that plays out. And you guys can see that does happen. That is option 1. If you're somebody who likes to trade like that and have the ability to trail and kind of secure along the way, that is something you could do if you like zone to zone. The other option with this would be using some sort of indicator. There are tons of them out there, you guys. Please do not only think that this is the only one I will show you, but I will show you an indicator. It is a free one. So all of you guys who keep yelling at me that I don't do enough free stuff, this is a completely free strategy. Everything's free. So there is an indicator called the 3M trend indicator. Just type in 3MA and it will show up. I have it favorited, but it is by this person here. You guys can use whatever you want, honestly. I've used this one on and off now for a while, and I like it. I think it's very beginner-friendly and super simple to understand. So that's why I'm going to show this, because I feel like this is a beginner-friendly type of idea, but the basics of it. You get red, and it's selling, and you get green and it's buying. So as far as this particular entry goes that we had and how this trade would play out, we'll remark it back up for you. So we're entering at close of candle here because this was our breakout candle. We're going to target our stop loss in this general area here, which it's actually already kind of in, but you guys get the idea. And then as far as holding this trade, or you want to hold it beyond 1%. Remember, I said that already. 1% is where you want to hold it to, at least, because you want to make sure you're making a smart risk to reward decision. But ideally, you're holding beyond that. And if you're like, I don't know how to tell what the market's doing or not, you can use an indicator to help you. So once you have secured whatever reward you've set in your head, whether it was 1-to-1, 1-to-2, we'll just say 1-to-2 here. We'll make something up. Say you set 1-to-2 in your head, and maybe you kind of do a combination of both. You kind of look to the left and you're like, hey, 1-to-2 looks good. And I like 1-to-2 as far as like setting a set amount, because everybody's different how they like to do things. Maybe you set that, but then you're like, I want to hold, right? So maybe you held for a while and you're like, wow, I want to use this indicator to hold. You would basically be holding until you saw either gray or red. So in this case, you would actually lose some of your profits because you didn't close, but it would be a good way to kind of see like what the potential of that trade could have been. So you would be getting out there and you would have gotten a 1.42 reward, which isn't bad. Honestly, though, in this exact example, I mean, I'm just kind of throwing this on and showing you guys how you could hold. Like, you could have had a 1 to 3. That's pretty crazy. If you didn't really close or secure better there, that's kind of bad. So definitely make sure you do that. If you're getting things like a 1 to 3 reward, you might want to just like take it, or definitely take partials, trail it for sure. I definitely would have moved to at least, you know, that one area. But yeah, you could use indicators like this when you're seeing either the gray in it or like the red. There are tons and tons of indicators that are even better than this for like holding. You can use volumes, you can use oscillators, you can use literally everything. There's so many. There's an indicator for everything if you really needed help with like when to hold or when to exit a trade. This is just a very simple one because it's very basic. It's a red and green. If crosses, you get out. I like that for beginners, and I think it works nicely on these higher time frames like the 1 hour, the 4 hour, and the daily, because it takes so much for them to change color. It's not quite as sensitive as it would be on like a smaller time frame like 3 minute, 5 minute, 15 minutes. So it tends to play nicely on these higher time frames. So if you are somebody who has a lot of patience, or you're willing to try out swing trading or something like that, this is a fabulous strategy. If you're a beginner, this is a great strategy. I know you guys get super sucked into those like smaller time frames because you think that they're easy, and you're watching those ridiculous YouTube videos where people are like, oh, it's so easy to do 1 minute time frame. I promise you it's not. The smarter thing is to learn on the higher time frames, learn these basics, learn how to trade very simple strategies. Get yourself in a place where you're building up your confidence a little bit, and then you can start looking at smaller time frames and more intermediate type of strategies. But this is a very simple breakout style strategy, just identifying a W or an M, or maybe a triple top or a quadruple top or bottom, and understanding when you would enter based off of a breakout. So real quickly, I wanted to show you, because there was like a good, here we go. This is another nice W, in case you guys are wondering. Like, once you start learning the patterns, you're just going to start seeing them everywhere, like W. Second leg of that W is a really nice leg. There's a big zone in here, but you guys can still kind of appreciate the fact that there's definitely a W there. Okay, so what I want to show you here is that this is not an M. You guys already saw the M. This is a quadruple top. You have 1, 2, 3, 4 hits. And I want to show you guys how you would trade this, because I know a lot of you are going to be like, but what do you do when there's more than 2 hits? How do I trade it? And hopefully you have learned enough watching this video by now to understand when you would actually enter this, and why having 3 or 4 tops isn't a problem as long as you know when to enter. Just because you have more than 2 and it makes not an M or a W, it makes a triple or a quadruple top or bottom, it doesn't mean you still can't trade it. You can still trade it. You just need to understand when to enter into trading it and what that means. So let's mark it up quickly. So you have a quadruple top, right? So you guys get the idea here. We have 4 different hits. We have 1, 2, 3, 4. That is our resistance area. We're hitting on resistance, knocked on at 4 different times here. And because of that, we want to form now our support. So we're going to pretend for a minute. I'm not going to put in replay mode. I don't want to confuse you guys too much, but we're just going to pretend for a minute. So pretend we come into the market and we got this, and it comes up, it rejects, it comes down, hits here, pushes back up. And then in your head, you're thinking, maybe we're making an M. You get all excited because you just watched the M and W video and you're like, woo, we're making M's. I'm excited. I got this. Christy showed me what to do. Now I'm going to make a ton of money on this second leg of the M. But then the market only comes here. And you're like, whoa, 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 whoa. Christy didn't talk about this. You're going to be like, Christy didn't tell me what to do if it doesn't come all the way through and break out. You didn't say. You just wait, guys. That's what Christy's telling you to do. You're just going to wait. You're going to let it come back up and hit again. And then you're going to be like, oh my God, Christy didn't tell me what to do. There's 3 of them. What do I do now? What do I do? Oh, Lord. You're going to wait. You're going to wait still. You didn't have a breakout. Remember in your head, try to remember you're waiting for the breakout move. This is a breakout strategy ultimately. You're waiting for the breakout from what would be the center of an M or W. If it doesn't break out, then you're not making an M, and that's okay. You're just going to be consolidating, and price is going to be knocking around in that little area, creating its own little zone. But now you're going to have to switch gears into a breakout strategy of a zone. So we're going to let it just do the quadruple tops. Some of you may have gotten mixed up here, and in all fairness, this would have been a decent entry. So this one here does technically break out, like the candle actually I don't want to confuse you guys with the line, but the candle actually closes under it. So a lot of you might have been like, ooh, I'm in it now. This was just a triple top. Got it. She covered this. And and maybe you put your stop loss middle area, and then you got stopped out with this massive candle. Don't get discouraged about it. It's okay. Don't freak out about it. You tried, and it's not a big deal. Losses are inevitable. They are going to happen. What is important is that you learn how to brush off a loss and keep moving on with your strategy, because what happens next? You get a fourth one, and in your head you say, oh, I know that quadruple tops can happen. So it wasn't a triple top, it was a quadruple top. Got it. You get a beautiful rejection candle. It's signaling a reversal. This is a clear-cut sign that a reversal is about to come, and then you get this monster that breaks through. So this is your okay, yes, I maybe lost 1% on this previous trade. Now I'm back in it, and I'm good to take this trade. So don't let one little loss be like, oh, forget it, I'm done. Oh, this strategy is terrible. It's gonna happen. You have to learn how to take losses. What's important is how you learn how to absorb a loss and move on and let it not affect your trading. Practicing a strategy and building your confidence in it will help you to learn how your strategy works and moves and the losses that happen. And it will help you. It will help you build that confidence to be able to hold through a trade or absorb a loss and be like, okay, well, if it wasn't this trade, then it's gotta be the next one, because now we made a quadruple top. So just remember that when you guys are trading, try not to get so focused on the losses. Try to keep as emotionless with it as possible. I know it's easier said than done. Get used to playing around with your strategies and get comfortable with them. That's my biggest advice when it comes to being able to take these type of losses. Okay, so you're going to enter in at the close of candle there. That's a pretty massive candle. You're not going up here, guys. That's crazy. You're going mid-level. Like, where do you see a lot? You see a bunch in here, a bunch in here, a bunch over here. That looks good to me. So then you're going to, what I would do, because I like to trade this way, is target your next level. A lot of you would sit here and target here. You're not targeting this. Remember, why are we not targeting this? Why are we not targeting this? I'm going to play the Jeopardy theme song, do 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 do. All right, we're not targeting it because it's not a 1% at least gain, and that's a terrible risk to take. Why would we risk that? That's a terrible, terrible risk to reward situation. So we're not targeting that zone yet. We're going to target at least 1%. And then, okay, we got our at least 1% here. So where's that kind of throw us? In this area? All right, let's look now. What does it look like? For real, where's the next best zone? I don't love this. It's not really that fantastic. It's kind of but what's looking nice to me is this area and here. This area has touches, then wicks up here. So I like that. Let's scroll over a little more. Yeah, this looks really nice in here. More over here. So I'm a fan of that area. So that is where I would be bringing my take profit down to. Because you can see when you're looking at this, this looks nice. When I kind of show you guys like this, you got lots of touches, a wick up here trying to and rejecting, touches, more touches. This looks nice. So I like this, and that's where I would put mine. That would give me a 1 to 2 risk to reward, which is great. I would take that, and then I would just do zone to zone like I've told you guys already. So it would look like that would be your take profit 1. Once you get to take profit 1, you would secure your profit. So meaning you would secure some of your profit probably around this area. I would secure it, which would give me a 1 to 1. And then you would just trail zone to zone. Your next zone would be at the bottom here where you see all those wicks. And that would be your next one. And then, just scroll out till you find another zone. And then we got another one down here. This would be your third take profit if you were trading this. And that's how that would look. So, and then trailing all along. don't want to over confuse you guys. There are tons of stuff where I show how I trade zone to zone on here. So just go watch one of those videos. I'll try and link something up here in the right hand corner where I show a lot of like zone to zone trading. Okay, so that would be that option if you wanted to trade it that way. If you wanted to use the indicator that I talked about and you want to see what that looks like, let's see what that looks like. That's the 3M trend indicator. This is actually kind of nice because it turns right around your entry, so that would be like another confluence for you. So if you're unsure about it and you're like, oh, I don't know, like maybe I took that loss on the third touch, I thought that was it, but then you were unsure about getting back in on the fourth, when you see an indicator also line up and give you like an extra confluence, that's always nice. Okay, so the way this one would work, like I said, you're going to be waiting until you see some gray or green, which here is some gray. So around this candle, at close of this candle is where I would probably get out, but some of you might wait for green, which would be the next candle. So let's see what that would have been. Golly, that's a nice one. So, am I on the right candle? Yeah. So you're looking at a nice 123.69 reward, which would be fantastic. Let's see. Hey, it kind of lines up with where I was looking at anyway. So that's always fun to see, like when your zone to zone matches up with like where your like indicator or something would be. I always think it's fun. I'm always like, ooh, another confluence. All right. So anyhow, that's the concept of this, and that is just showing you guys what a quadruple top would look like. You can understand what a triple top would look like. That would just mean you would have actually broken through here. The M's and the W's themselves are always going to be found on here. You will constantly be seeing those patterns, and I would suggest that you look to trade the second leg of them. You don't want to be trading the beginning because you don't know if it's truly an M or a W at that point. You want to trade the tail of that. The same thing for these breakout moves that you're getting where you have a triple top or a quadruple top where it's hitting. You want the breakout move of it. You want to get that very last leg that's about to print. That way you're getting the move and not getting stuck in a consolidation of a zone. Okay, so I hope that was helpful for you guys. I think that M's and W's are great. I see them all the time without even meaning to now because it's just been instilled in me. So it's like I can't even help it. But I do like to use them as another confluence. There are plenty of times where I'm not always sure. And when I spot them, I'm like, oh, maybe I'm going to wait a second. Maybe I'll wait for it to see if it does a breakout move to form a second leg or something like that. Triple tops and quadruple tops and bottoms, those are huge too. You will see them form all the time in the market. And now that you can kind of identify them and what they're doing, where they're just kind of bouncing on and off of major areas of support and resistance, that helps you to understand better about when you should ideally be getting in, waiting for that breakout so you're not getting frustrated sitting in potentially consolidation or potentially getting just stopped out over and over and over again because you weren't waiting for the actual breakout move to happen. So, hopefully this will help some of you guys with this. So practice it for sure. Please practice on demo. Always practice on demo first, and it will work on any time frame, any pair that you guys could ever think of. The higher time frames are going to give you stronger, better indications of these patterns. They're going to give you less noise. So when you see an M or a W or a triple top or quadruple top or bottom, you're going to have a better quality trade potentially because of that versus like, a 3 minute, 5 minute or something like that. So if you're going to be looking at the smaller time frames, Godspeed, because those are kind of tough to do, but they're nice to have as far as just the knowledge in the back of your head, putting together like a market pattern, and that's always helpful to use, but I wouldn't heavily depend on it as a confluence on the smaller time frames. But when you're looking at like the 1 hour and higher, you can definitely use these patterns to trade for sure, and they can be nice. So anyway, that is it for this video, and I will see you guys in the next one.